In my background, I've also previously worked at CDP and led the teams that develop and score the questionnaires there, so an ESG ranking in itself. And I've worked with financial institutions to actually start scoring their portfolio companies and understand how they're performing, work on improvements with them, and develop that monitoring over the course of months and years, and continue to improve that portfolio ESG scoring. But yeah, where I can see that there can be an element to improve there is actually making sure that that ESG incorporation is done right at the beginning. So before decisions are being made around that investment and whether to invest or not, that actually, as part of the due diligence phase, that ESG element is a key consideration rather than an afterthought.
A need to do rather than a nice to do.
Exactly.
That has been a topic that's come up a fair few times, and how things have developed in that space. Sören, I'll come to you on that. How financial institutions are integrating ESG criteria into their investment strategy from your perspective?
Yeah, I mean, in the end, it is about KPIs, right? KPIs, we got to look at quantitative and qualitative KPIs, and many businesses are not even aware yet of the impact that they are causing. So as an investor, we can really educate them and have our criteria and look for the impact that is being caused. In terms of Water 150, we're looking. Let's make an example. We're looking at helping 1.4 billion people in need of clean drinking water by 2032. So that's the quantitative impact. And then the qualitative impact is more based on surveys, before, after surveys. How has your life changed now that you have water, and so on. And yeah, I think it's one responsibility for companies to look at how do we build and measure impact, but also many investors need to look at, okay, what are the metrics that we want to measure?
Yeah, absolutely. And just to build on that as well, I think there's a lot of measurement around carbon impact, and that's also what I work with clients on as well, this element of carbon footprinting. But a key part of ESG is also water footprinting, and the carbon impact of water isn't necessarily considered in that same way. So it's really important to have that as part of your full ESG measurement.
Sticking with that integration, what do we feel are the things that might be slowing that down, that might be blocking it from actually happening? Is there anything you could put your finger on to do that might hinder progress at all?
Yes, there's, like I was talking about, this ESG possibly coming as secondary, and also I think there's a great deal more of engagement and having the rest of the organisation on board with this subject. It's really great us coming together in a sustainability event talking about this, but what we really want is also CFOs talking about sustainability straight away and being on board, having that as the important discussions around the table immediately.
Sören, from you work in a very specific space with this, how do you feel the interest is in terms of the, for want of a better word, the sell of the idea? Do you feel that is really sort of cutting through now? Is it becoming an easier sell, I suppose, for people to want to get involved in that kind of project? I hope I phrased that right, but do you know what I mean?
Yeah. It depends on who you're speaking to, right? There's a lot of traditional investors that don't care about impact as much yet. For them, it is more of a nice to have. And I would say that's the majority of VCs, even those VCs that call themselves impact VCs, that are looking for impact, they still have as a main criteria it needs to be a profitable business. The business case makes sense because that's what we're in business for, right? To make a profit. And you were mentioning how do we get the whole corporation on board? The CFOs, they're looking at the money. And I guess there it's important also for businesses again to develop a way where the impact and profit are aligned rather than going against each other. So like a shared value ecosystem, because no one wants to give up profit. So again, I'll take Water 150 as an example. We've aligned all the different stakeholders, so they all have the same interest in mind. The equity investors and those who purchase water ownership, they benefit from the utility and the price of water. Well owners benefit because a lot of well owners are not able to monetize their asset today because they can't compete with the Nestles, with the Coca-Colas out there. So we give them a way to monetize their asset and continue protecting that water source. The planet benefits because we will never extract more water than what enters the system, and people in need benefit as well through an impact system that is funded through this for-profit system. So it's all aligned and works together, and there are synergies created where the more impact we are causing, the better image we're building, and that is impacting the profit of the whole system as well.
I'm going to do something I very rarely do, and that's ask a two-part question, because I hate them. So I apologise in advance. For you, what are the main benefits for investors and society? And also, are those benefits being publicised enough?
I think, there's huge amounts of benefits from integrating ESG into the investment process. And there's a lot of research out there to show, for example, higher ESG scores leading to more profitable, more impactful portfolios. So there's a great deal of evidence to say that that's absolutely the positive outcome. But I think there's also sometimes a lack of availability of information being publicised on this. Organisations who tend to these days, be concerned about greenwashing, and then end up verging on green hushing. So keeping things quiet to, even if they're doing really great things, not publicising that to avoid any potential negative implications of that. But that's why I think it's so important to have really clear ESG assessment of investment portfolios and have a clear methodology. And I work with organisations to do this, have a specific, clear methodology to then showcase that this is the clear outcome of this ESG assessment. For example, I've worked with an investment firm that invests in a lot of renewable energy plants, and the assumption that they were making initially was that all of their portfolio was good, high performing on ESG, surely. But actually a clear assessment of that against a standard set of criteria showed that, yes, they're performing really well on the E of ESG, but there were lacking areas in the social and governance side of things. And we worked with that organisation to make sure that they could improve that going forward and give recommendations on how to do that.
Sören, I'll put that question to you as well in just a second, but those it's kind of a sad term, isn't it? Green hushing. And I just want to dig into that a little bit more. Obviously, I'm not going to ask you to name names, but when you're working with different clients, different businesses, is that something you regularly come across? Maybe a reluctance of wanting to do certain things because they're concerned about a negative feedback for doing something positive.
Yes, but that's why clients come to us as well, and they want to know the way to position that correctly and communicate that effectively, and that's where the comms side of our team really comes into play. So yes, there is that concern, but there are ways in which to communicate and be transparent, and I think that's what one of the most important things about ESG and sustainability is transparency, providing that communication in such a clear and transparent way that you can build on trust, and hopefully get away from the concerns around green hushing.
Yeah, as I said, I won't push you for names. I saw your pupils dilate ever so. I wouldn't do that to you on this stage. Sören, if we just go back to the benefits to investors and society and whether there's enough publicity about that, do you feel that's well known enough of the impact it can have?
Yeah, I mean, expanding on what you just said, I agree with transparency. That's the key factor there, because we can yell very loud about the impact that we're causing, and then it turns out that is actually not happening. So it's rather a bad image. So we need to make sure that we are transparent and we're communicating effectively what we're actually creating, and then as long as that is true, I think we need to be a bit louder, because like every industry operates in bubbles, and the sustainability industry as well. So we feel like it's talked about a lot, but that's because we're in our echo chamber, and all the companies out there, all the other ones, they're not talking about it. So I guess that's really where education comes in a lot, collaboration, encouragement, to really have the public conversation, to raise more awareness about all these topics.
What I want to move on to next is scaling up sustainable and ethical investment. What are the key challenges, do you both feel, in terms of accelerating that field, in terms of scaling up financing for sustainable development? What are those challenges that are maybe stopping that scaling up or slowing it down?
I would repeat again around the education and engagement side of things, but also add to that longer term thinking. I think there are areas of the financial sector that are warming to thinking longer term, but there is still a strong contingent that are still thinking just in terms of short-term, medium-term horizons, and the impacts of climate change, for instance. Yes, we are starting to feel it in the short term, definitely. I mean, today is a good example. It feels lovely and cool in here, but outside it's absolutely sweltering. So there are some short-term impacts already, but longer term is where it really does hit. And the likes of regulations such as the TCFD and the newly developed ISSB, so International Sustainability Standards Board, and the IFRS sustainability standards that have been created are working towards encouraging this short, medium and long-term horizon thinking. But yes, I've not yet seen that taken fully on board from all the financial institutions that I interact with. So I think that's definitely a barrier at the moment, but something that regulation is trying to overcome. And I can see, yes, once we get past that into that longer term planning and thinking, that will be a huge step forward.
Sören, anything you'd add to that?
I mean, I agree. Education on all different levels to all different stakeholders, that be companies, investors, consumers, governments, everyone that is involved in the system that we're aiming at. And 100% also agree with the time horizon. Most VC funds have aiming for liquidation within 5 to 7 years or so. and the most big changes really require a long time to really happen. So for a lot of venture capitalists, it's just too long of a time frame. And family offices, for example, are operating more on a longer time frame. They're thinking more in decades rather than years. And I mean, should the investment industry change in that way? How reasonable is it to expect that everyone is looking for longer investments? I don't know. I don't know how realistic it is, but we can also look at different milestones, right? Like hey, we're offering you an easy way out in the next 3 years or 5 years, and we're aiming to create such and such impact until then, but the longer term vision is a lot longer.
Okay, one thing I'm conscious of is we had a lot of questions for our last speaker when it came to the world of finance, so I'm guessing we may have some more if many of the audience have stayed. So I will go to the audience now. There's more things I want to ask, but do we have any immediate questions from the audience on this panel? We do, at the back in the white, and then over to that side.
Hi, Ilana Adamson from Be Better Sustainability. Just really interested in how you think the biodiversity assessments and calculations are going to go, because it's such a complex thing to calculate. Have you got any strategies around that?
Yes, this is something that is coming more and more to the forefront. So we've got the TNFD now, in addition to TCFD, and also I mentioned earlier the ISSB, the International Sustainability Standards Board, is working towards incorporating nature into its next consultation as well. So there is a lot more of this coming, and I think it does add to some of the complexities that we deal with in this space in reporting and sustainability, but it's so important and so imperative. So yes, I think there's more of this developing, and we do need to keep on top of it. There's ways in which we can incorporate that as part of general reporting. Like, for example, I mentioned I worked at CDP. CDP has questionnaires around climate change, forests, as well as water. So there are ways to help report around all of those elements in a standardized way through those frameworks. But yes, there is more added to our plate as sustainability professionals. Yes, they're all important things, but I do feel your pain.
Very long suffering there.
And I mean, the less professional answer now, because I'm not a biodiversity expert, without the only thing I know is we need water for biodiversity, so water. Work again understanding everything about it from all different areas, right? Like working with the stakeholders and understanding, working with scientists to really understand biodiversity properly, and then understanding how do we measure it effectively.
Okay, I think next question was just over at the far side, short sleeve shirt. Yes, that was you, all the way around. And I think I saw another hand come up in the middle. Oh, there's another couple. Yeah, thank you.
Thank you. Was it worth the wait? I was at a conference a couple of years ago, and there was quite a heated debate about the idea of fiduciary duty getting in the way of sustainable and ethical investment. You know, by definition, it was stopping a focus on anything other than returns. How do you feel that's changed in the last couple of years, if at all? Oh, and it's Rich Bennett from Atlas Copco, by the way. Thanks.
I think there's quite a stark difference between what's happening or has been happening in the US and then the rest of the world. So I think definitely the discussions around the net zero asset alliance and some organisations coming out of that because of concerns around fiduciary duty. I was actually quite alarmed by those statements because actually going forwards, if we are to meet net zero, if we are to have sustainability, then organisations that are essentially unsustainable should not be organisations that carry on in the future. So I disagree with those statements entirely, and I believe that all organisations, especially those in the financial sector, should be working towards net zero.
Okay, I think we've got time just to squeeze a couple more questions in, if we can keep them pretty short and sharp. Just in the middle here, Charlie, and then there's another one right at the back. If we can keep these relatively brief, I'd be very grateful.
Dominic Offer from International Relocation Company. I was listening to a webinar the other day that looked how Africa as a continent could become incredibly rich through investment from ESG development, solar, wind, and also very rich in raw minerals and materials. But because of corruption, lack of investment, of social reform and development in this area, it's being largely overlooked. Is there something that we could do to improve that?
Well, that's tricky.
Well, I mean, how do we fix corruption in different countries? I don't know. Africa is very rich in natural resources, so the potential is massive, right? It like the region is gonna develop more and more, and maybe it's gonna develop similar to Europe, North America. We're often talking about westernizing Africa, and a partner in our team is actually very strongly against that, because I mean it's just what we are used to, but that doesn't mean it's like the best system that we live in. We have a lot of flaws in how we live, right? So I guess the goal should be in collaboration with everyone there, trying to find, like, maybe do it better than here in Europe and North America, and rather than looking at westernizing, seeing like what are the opportunities, like where did we go wrong, what can we do better. I don't know, does that answer the question a little bit?
It's a big question. It's a big question. We've touched on it, so we'll thank you for your question. I believe there was one more just at the back over there, Charlie. If you just keep your hand up so Charlie can see you. There we go. Thank you.
Hi, Becky Valentine at Spenbeck. It's a question for Sören. Did I hear you right that you touched on about family businesses and the fact that they take a longer term view inherently in most business decisions, and therefore that might cause an issue with sort of venture capitalist and ethical funding?
Family offices.
Do you mean, family businesses? Is that what you meant? Family run and owned businesses?
Well, no, I don't mean family run businesses like any store or so, but family offices that invest hundreds of millions of dollars. Like they're managing their family's wealth.
Thank you, because it triggered something in my head about that issue, which I hadn't considered as a family business owner myself, about the family business sector that takes a far longer term view and has stewardship very much fundamental to who it is, actually runs contrary to what you're saying about the short-termist view on finance, and how maybe as a sector we can seek to marry our longer-term views with the short-term nature of the finance and investment world.
Okay. I think.
I don't.
Yeah,
I'm not sure. I'm not sure I understand the question. Sorry.
So I think, Sören, you're talking about sort of much larger funds rather than smaller family business. Was that sort of where you were coming from?
Yeah.
There? Yeah. So I think maybe the two things didn't quite.
Yeah, it just triggered in my head actually thinking about the family business sector, which is completely different, but actually does have that far longer term view on anything that doesn't then marry up with the ethical and sustainable investment if it's short term. So.
Yeah, I think we sort of were slightly misaligned there,
no,
but
that's fine.
I absolutely
Thank
see
you.
your point. Thank you. Okay, and that is the time we have for this session. So round of applause for Sören and Faye, please.